I don't have anything to share.
Oh, okay.
I got it. Give me 30.
Oh, wait, we're sharing stuff? Come on.
All right. This is Sean's show.
What is happening, everybody? It's your boy, Chicago Sean McLaughlin. I'm the chief option strategist at All Star Charts. And today I'm joined by our head technical analyst, Steve Strazza. What is happening, Steve-O?
How's it going, man?
Oh, just a nice little quiet Wednesday here at the house. Everyone's gone. The kids at school, the wife's at swim class. It's nice and quiet, just the way I like it.
Probably getting some good trading done today then, no?
It's been an active day. I have to admit, with some other random trades that I've got going on. It's been busy, busy in a good way. I shouldn't complain. It's been a profitable day, but we're not here to talk about that. We're here to talk about the new options trade we put on today in Occidental. This is a name that you are pretty excited about. We were talking this morning about some setups, and you love the setup in Occidental Petroleum. Why don't we put up this chart and let's walk through it?
Yeah, when you mentioned it on the call today, I was like, oh, yes. Usually, so the way that our internal meetings on Wednesday mornings typically go is a good portion of the call is usually for us figuring out what the free option trade will be, right?
Yep.
Today, 10 seconds. Sean was like, oh, I like Oxy. I was like, done, let's go.
Yeah, it's funny now that you mentioned it. That was pretty quick. Usually it's not that quick. We kind of work our way to it, but today
right.
I was like Oxy, and you're like, done, let's do it.
As JC would say, that's information. So, like you said, beautiful chart. Like you mentioned in the post, this chart this stock got rocked coming off the 2018 highs. Nasty drawdown from whatever, call it 90 to under $10 a share. To 2020 lows. And then we built out a really nice base. We launched higher from it in 2020, went sideways for a good period of time, and then launched higher from that base, which you can see right here. Broke out from that, really aggressive leg higher. In that leg, in this big stick that you see here on what we're showing as a weekly chart, the stick right here, that's when Warren Buffett reported his big investment in Oxy. About a month and a half back. Now we have launched higher from there. We've started digesting gains in a really tight coil. Call it a bull flag, call it a pennant, call it a wedge, whatever. It's a continuation pattern within the context of a very strong primary uptrend. So typically what we see from these patterns is upside resolutions followed by another leg higher. That's all we're betting on here, right?
Right. So this chart here, this long-term chart, I mean, we're looking at what, 8 years of price action here, 7 years of price action. When you look at it like this, it's kind of like, oh man, this thing's already run off those 2020 lows. Why am I buying it here? Like, that seems crazy. But if you zoom in, you got that other chart, the yearly chart there, Strazza? If you zoom in, there we go. So what we've observed over the last, let's call it 6 weeks or so, is we've seen some pretty good consolidation around that previous level of support that acted as support before the 2020 sell-off. And so to me, that tells me this is a combination of two things. It's previous bag holders who are sitting in a terrible position and finally have an opportunity to break even, who are getting out. That's a good thing. That's what's causing this resistance here. But now, as we've broken out above, that little triangle that you've drawn out, that is information, as you like to say, telling us that, hey, the next move may have already begun. It's giving us time to get in, thankfully. But this is a pretty bullish setup. Would you agree?
Yeah. And listen, the way this flag or pennant is drawn, I just want to show. Here's the current chart, right? You could draw this in any number of ways. So sure, we have it drawn like this originally. Listen, this is a coil. It's not about the exact way that you draw something like this. It's about the supply and demand dynamics that are taking place, right? So what we have here is, like we talked about, when we zoom out, look at this thing, right? We have the nice base from 2020. We launched higher from here. Then this is the second base that I'm talking about. This is the second consolidation here. Again, we're building up, the right kind of energy to resolve higher from this. We resolve higher from here. And notice how the consolidation phases are getting shorter and shorter. We had a big base down here at first, at the 2020 lows, at a smaller base here. Now we have just a tight continuation pattern here. This is an uptrend. It continues to digest its gains in a constructive way. You can draw this any way you want. That's not what matters. What matters is the fact that there was a strong primary trend coming into this right here. And now we're digesting, consolidating, building up energy for that next leg higher for a strong leg coming out of this. So that's what's going on there. The way it was drawn here, sorry, just kind of irked me a little bit.
No, I love you walking through your process there. I'm sure that was instructive to a lot of people who are, maybe still figuring out technical analysis, not sure where to draw their lines. I mean, at the end of the day, right, the market doesn't care where we draw our lines. The lines are inconsequential, but they give us a good point of reference to look at to see where supply and demand is happening, where imbalances are happening, or where, supply and demand is equal, so to speak. So we draw lines all the time, but again, the market doesn't care what we think about our lines or where we drew them. But anyway, we love this setup. And so let's talk about what we think could happen if this thing follows through. In the post that I wrote, I highlighted the 90 level as the next possible spot where we can target or
That's
87 to be exact, but definitely higher from here. And there's a lot of room. I mean, we're trading at around $60 a share right now, just a little shy of 60. So a move to 90, I mean, that's a 50% gain if we get there.
And then it begs the question: do we get that $100 roll?
That's a very good question. And I didn't consider that when I put the trade on, when I selected the strike to sell. So the trade that we put on here, by the way, guys, is I went out to October options to give us plenty of time for this to work out. October is 6 months away, plenty of time for a trend to really develop here. And I bought a bull call spread. So what I did is I bought the 60 strike calls, which are just slightly out of the money. And I sold the 90 calls against it because two reasons. Number one, it was just above this, what we think could be the price target here around 87, 88. Yep. Also, those calls were offering some really good premium. I think they were quoted at around 2 and change at the time that I put the trade on.
The 90s?
Yeah. So that was some good premium to sell into. So that's why I chose to put on the bull call spread. I mean, we could have just bought calls here, but the implied volatility in the options were a little higher than I was comfortable doing. So that's why I looked at a spread. And if you want to pull up the next chart there, I think you got the P&L graph just so people can see what we're talking about here. So here you can see it shown out, displayed. We bought the 60 calls, sold the 90 calls. There you see right there in that lower right corner, that 217, that was the premium, at least at the time I took that screenshot. So yeah, those calls were offering 2 and change, which to me felt like, I don't want to say free money, but I felt like, hey, that's a good strike to sell to reduce the cost of this trade.
It also tells you that market participants are anticipating a potentially massive move from this stock, right?
Right. I mean, the market makers are no dummies, and more often than not, they price things for the right reasons that we might not figure out until later on. But Strazza, now that you mentioned the $100 roll, I'm rethinking everything. Oh man, $100 roll, one of my favorite trades. But you know what? If Oxy gets back up to 90, if Oxy gets to 90. By then, we will already have hit our profit target. I'm quite certain. We're not looking to hold this spread all the way to get the maximum gain. I like to sell these spreads when I've achieved 50% of the maximum possible gain. So I paid $7 for this trade all in. I'm looking to make $12 on the trade. So I'm going to sell the spread at 19, right? So 19 minus the 7 I paid would be 12. So I'm looking to sell the spread for $19. The most the spread could ever be worth is 30, right? If I held it all the way to expiration. But if Oxy makes a run towards 90, we will already have gotten out, already hit our profit target. And then that begs the question, do we need to put a new trade on to take advantage of the $100 roll? I think that'll be high on my list of ideas.
If the stock's at 90 this fall, yeah, we're not going to be worrying about the $100 roll then. But it sounds like an aggressive price target, right? But it's not. This was a $100 stock not long ago. It'll happen again. We've talked about this before. These commodity stocks, when they go, they trend and they trade like commodities. I mean, these trends, it looks like something I see when I open up my cryptocurrency workbook sometimes with these commodity stocks. So we're expecting an explosive resolution. We have that high and tight flag playing out right now. There's no reason to think that any energy stocks will resolve in any direction but higher right now with the way that they've been trading. Crude oil is like 25% off highs right now. Energy stocks are still at,
that's amazing.
It really is. Right. So and what I mean by that is it begs the question, okay, if energy stocks are still going to be making new highs when crude oil is in the 25% drawdown, what happens if and when crude oil resumes the very strong primary uptrend, underlying uptrend, and goes higher again, starts making new highs? Energy stocks are going to be going bonkers, you would think. So this whole cyclical trade, this whole commodity trade just keeps working. We just keep going back to the well for more. I like this options trade as much as any, really. Yeah, maybe the last one I liked as much was CVX.
And I don't think there's anybody out there who's willing to make the bet that oil prices have peaked. I think there's a lot more room to go there, unfortunately, for those of us who put gas in our cars.
Sean, this time 2 years ago, we were all talking about oil trading at zero.
Oh, that also is unbelievable. Wow.
Right?
All right, Strazza. Well, hey, buddy, I'm looking at my watch. You and I have a busy media day today, so we're going to cut this short so that we can get to our next appointment here in a few minutes. So everybody, thanks for tuning in to the All-Star Options Weekly Trade of the Week. Strazza, thanks for filling in today for JC. We'll be at it again next week, everybody. Take care.